The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague, the rooster who'll have plenty of eggs to lay for the chicks on Sunday morning. It's Anthony McDonald. How are you, Anthony?
I've got to get to the shops, James.
Fantastic. Well, this week we look at what comes next in the great Trump saga. We pick out 5 corporate trends shaping business in 2025, and we ask why the Labor and Liberal housing policies landed like a brick. Anthony, let's start there, and I suppose it was inevitable that the federal election would eventually turn out to be all about housing policy. It is the great Australian barbecue stopper, and I guess it's a crisis point for lots of Australian families at the moment. But those hoping for big picture, thoughtful solutions were left pretty disappointed by the band-aids that were presented at the Liberal and Labor campaign launches last weekend. Let's briefly look at the policies. Now, Liberal leader Peter Dutton, he's pledging to introduce tax deductions on mortgage interest for first home buyers. So interest paid on the first $650,000 of a mortgage would be eligible for a tax deduction for up to 5 years, which could save a first home buyer up to $60,000 in total. And then Labor leader Anthony Albanese unveiled a $10 billion investment to build 100,000 new homes exclusively for first home buyers. But the cherry on top was a pledge to expand the first home guarantee, which currently covers about 35,000 first time buyers, to an unlimited number of people. So this provides free government-backed lenders mortgage insurance for buyers with deposits as little as 5% that helps them get into the market without the need for the usual 20% deposit. Anthony, why have these moves gone down like the proverbial lead balloon with economists?
Well, James, obviously you expect me to pan them. And before I do, can I just start on a positive note and say,
please.
Look, it's good to see the major parties got there.
Yeah.
Right? Like we've been talking about housing forever. It's, some sort of housing policy, something for people to chew on ahead of the election. It came late, relatively speaking. Still not completely sure how genuine either side is about it. Anyway, the Liberal one, start there. I mean, it looks to me like a policy to keep the housing construction industry going, or kickstart it or something. Residential approvals, they had been in the toilet. They've sort of rebounded in the past couple of months. Yep. Back at running at about 200,000 a year, which is good, but it's not really where they need them to be if they're going to fix the housing crisis. It looks like a good kicker for anyone buying a new home as their first home. So it's not really aimed at inner city buyers and more regional city outskirts, and I'm okay with that. And if you think about when you first bought a house, James, those tax deductions, they probably would have been helpful.
Yeah.
So I get it. You still need a decent deposit though. Using the tax system to do it, I'm not so sure about that. We spoke a lot about tax reform last week, James, in your absence. I'm not sure this is the way I'd go about it.
Yes.
The Labor one, 100,000 new homes, first home buyers. Okay, once again, so you're talking about sort of regional areas, city outskirts stuff, again, new builds. It's not going to be in Hawthorne, James, or Paddington up here or whatever, which is fine because a lot of the country's not city slickers. So once again, I'm okay with that. But overarching them both, James, tell me, how is either fixing the supply of housing problem?
This is exactly right. They'd be reasonable ideas if there was heaps of new housing coming into the market. But instead, what it's going to do is give first home buyers more financial ammunition to fight for the scraps, the relatively small number of available houses that are around at the moment. And what will that do to that relatively small number of houses? It'll push the price of them up.
Yeah.
That's the problem here. And look, you can't click your fingers and get supply into the markets quickly. Because if you could, someone would have done it by now, right?
Absolutely.
And you're right. There are some okay housing policy ideas that have been put up by the major parties. I think the best one is probably the Liberals' $5 billion for infrastructure that can support new housing. That's exactly what you need. But look, it's not a quick fix. It's a long-term solution. It's taken us a decade to get into this problem, and it's going to take us a decade to get out. But the issue is that on the way out, you get these little Band-Aid ideas, And that just pushes the price of housing up. I mean, Michael Bleeby, one of our property reporters, he said this week that the estimate from the experts is that both sets of policies are likely to push house prices up 15%.
Yeah.
I mean, who's that helping? I'm not sure. So, look, it's been interesting. The major parties had to do something on housing, but I think it's interesting, Anthony, that a lot of the week has been spent sort of backtracking from these housing policies and defending them and saying, oh, well, it's just the start of what we'll do. It's just such a vexed issue that's so hard to solve, isn't it?
Yeah, I mean, these things, like you said, James, they stimulate demand. I mean, that's not going to be the answer. That leads to high prices. We all love higher house prices, anyone that owns a house. But, I mean, that's also the problem we're trying to fix here, is to make houses more affordable for first-home buyers. I don't see how this will do that. I do worry it's more about propping up builders and trades and trying to win their votes with all this, promises to stimulate the building of the houses and encourage more houses. But I don't know. It's hard to see it all coming together, James.
You just made a really good point there, Anthony. And I think, we had a column by our economics correspondent, Mike Reid, this week. Really what we need is for house prices to stop going up.
Mm.
But what politician wants to be the ones to say, hey, under my government, house prices will not rise any further? It's just, it's not an easy idea to sell, even though it's what we need to happen. So, for a while, we're going to get these Band-Aids and we'll hopefully just have to fight our way out of the mire over a lot longer period.
We will.
Well, Anthony, let's move to our first topic of the week, and it can only be one man, Donald Trump. It's actually been a relatively quiet week in Trump world. There's been a little bit more backtracking on tariffs, some temporary exemptions for smartphones and electronics from China's huge tariffs. And there's also been some exemptions for car parts, or talk of that at least. But look, over the last week or so, share markets have generally moved sideways. A few up days, a few down days, not too much drama. So Anthony, I think this gives us a chance to step back and take stock. Where are we actually in this Trump drama, and what might come next? Now, I know last week you talked about a lot about the big market gyrations on the podcast, and that was just so dramatic and exciting. But I guess the question I'm thinking about is, we're now got this 90-day pause on tariffs for everyone except China. So does that mean we're in a bit of a holding pattern? Is it even realistic to think that Team Trump can do 70-odd trade deals in 90 days?
Surely not.
Surely not.
How do you pretty much rewrite decades of trades and free trade agreements in 90 days, James? Like, you got 70-odd agreements. Do you have 70 different teams separately negotiating 70 different deals, or do you have like 10 teams doing 7 each, or 7 teams doing 10 each? Do you try and do like one every 30 hours between now and the deadline?
I like that idea.
Or do you just back end it and have them all flooding in on the last day? I mean, give me a break. Even if you're the president of the United States of America and your phone's ringing hot with worried governments and trade ministers, and they're all offering to fly to Washington to meet you, just trying to pull this together. I mean, at the drop of a hat.
Yeah.
Surely it can't happen. And do you really think that even if it could happen, that you're going to get sensible, lasting, well thought out policy in such a short time frame? Policy that considers the nuances of every single country's trade with the US, that deals with the things that they trade that the US can get elsewhere, that they can't get elsewhere, that deals with like the security arrangements around those countries as well. Directionally, you can see what Trump's trying to do here. He's trying to fix that US budget deficit that's alarmingly big, and it's been getting worse every year in recent years. So he's trying to shock the system, but I don't know, James. Am I being too cynical?
No, I think the practicalities of this are important. I mean, the other way to look at it is Trump sort of promised to get deals done in 90 days. So if you're an American voter, you're probably sitting there thinking, all right, well, 3 months from now, Donald's going to come back and this is all going to be sorted out. Now, if you're on the other side of the negotiating table, surely you just say, okay, well, Donald set himself a deadline. I might just wait till day 89, give him a ring about lunchtime and say, well, look, we better nail something down, hey? The whole thing, I mean, the idea that we're getting out of this sort of rolling tariff fight in 90 days is silly. I think we need to get ready for something much longer than that.
Yeah, so James, while the pause has been playing out, obviously the escalations in China have still been going.
Yeah.
Now, do you think that makes China the focus of the trade war? And if so, that can't be good for Australia, can it, given how much we export there?
No, this is a really good point, and I think we're just sort of waking up to this. Everybody was so relieved by the pause and 90 days to breathe, that they sort of forgot that what it means is that all of the energy of the Trump administration is now going into bashing China, and China's doing the same thing. I mean, just think about this week. We had the US putting controls on the computer chips that NVIDIA can sell to China. And NVIDIA saying, oh, okay, that's going to cost us $8 billion. Oops. And then you had the Chinese telling its airlines, please do not buy any planes or plane parts from Boeing.
Boeing, yeah.
I mean, the tariff rates are so high, that the tariffs that have been placed by both China and the US are so high that there's basically going to be no trade between these two countries.
Yeah.
And that is such a huge change for the world, and such a bad thing for the world. I was really interested, Anthony, by an interview that the Wall Street Journal had, or a story they had, about Scott Bessent, the Treasury Secretary, who suggested that one of the things that America wants to make part of these trade negotiations is that other countries should increase their trade barriers with China. Mm-hmm. So it's not hard to imagine that when Australia's turn to negotiate their deal with America comes up, the Trump team is saying, now look, we can come to an arrangement with you, but for us to be friends, you're going to have to impose your own tariffs on China. We want to squeeze China right out of the global economy if we can. That's a huge ask for lots of countries, but a particularly large ask for Australia. We send 35% of our exports there. Mm. If America really wants to lean on us in that way, that could be crippling for our economy. And I think I don't think we've quite woken up to that idea yet. Jim Chalmers this week has been, really energised by Trump as the sort of shadow over the campaign, because he's able to use Trump as a stick to beat Peter Dutton, say, Labor, we're not like Trump, but Dutton, he's a bit like Trump. That's all good and well, but someone's going to have to deal with this bloke after the election on May 3, and it's not going to be easy.
Absolutely. So given the news flow we've had this week, do we have any sense of how these deals with the various countries are going to play out? I mean, you just mentioned there that the US could lean on countries to put up their own barriers against China. Do you think that will even work?
I'm not sure. I mean, we actually had a bit of news on this in the last couple of days. The Japanese delegation has been sitting down with America. They're over there in Washington. Trump was apparently himself in the meetings and said, geez, they went well. I mean, you can just see what's going to happen. He's going to say, every deal that he does is the best deal ever. Going to be, beautiful deal, wonderful deal for America. But I think the contents of these deals are going to be really tricky for lots of countries. Yes, America's going to ask lots of countries to squeeze out China. And I think that the key ones there are Japan, Korea, India, and Australia and Britain. But what's Europe going to do? How's Europe going to react to being sort of nudged by America in that direction? Europe really feels it's been whacked by America already in the area of defence. Are they really going to want to cut off access to cheap Chinese goods and import inflation into their country? I think it's really difficult. And I think that's the sort of message out of all this, Trump is trying to change the way global trade happens. When you change the way global trade happens, you change the way money flows around the world. You change, and when you change capital flows, you change the price of every asset. How do you value BHP in a world where it might be closed off? Some of its markets might be closed off. How does the RBA figure out the price of money when it doesn't know how trade between Australia and China is going to continue to go? I think the level of uncertainty, we're just starting to get our heads around it at the moment. It's quite incredible. But Anthony, as I said, markets have been sort of calmish this week. What do you reckon they're watching for? What are they waiting for? What are their pain points?
Well, they've been very calm if you consider that the market's not even sure that the risk-free rate's still the risk-free rate, James. I mean,
Yes.
chuck that onto your list of concerns.
Yeah.
Obviously, what are they looking for? I mean, obviously Trump, hanging on every word. Like you say, his updates on meetings with different trade delegations. Besant as well, who you've been covering for a while now quite closely. Obviously, everyone's a little bit more cautious about him. It seems like he's the guy that's often sent out to sort of try and explain Trump's thinking and how it translates into markets and to hose everything down to remind everyone that common sense may win in the end. I'm not sure. There's also the Federal Reserve Chairman, James, Jerome Powell. I mean, whatever the Fed says about Trump, their dot plots, inflation rates, it's all hugely relevant to markets at the moment.
Yeah.
China's reaction, James, is hugely important in markets as well. I mean, particularly here in Australia. Like you said, the Chinese made it pretty clear last weekend that these tit-for-tat tariffs have now got to the point where trading with each other doesn't make sense anymore. So, and they're clearly now about more than redirecting trade and into the areas of spite and security and power. Those great big topics that superpowers have fought over for centuries. Yet China, despite saying that, they still raise the tariffs in a tit-for-tat move. So, I mean, they're clearly willing to play the game for now. Now, think about all those goods in China, James. If it doesn't make sense for them to go to the US and they don't end up going to the US, where are they going? Where else in the world are all those things going to find a home?
Everywhere?
Everywhere, exactly. So you can't imagine the Chinese just overnight switching off 20% of their manufacturing plants, right?
Totally.
Because they're not servicing the US. So we're going to get all these goods. Then the next question then is, all right, well, what does China do about its own economy? What impact does it have on its own economy? What happens in terms of stimulus? All these things, James, they're pretty macro things.
Yeah.
Equity investors will sit down and tell us that earnings are still very important, results and forecasts, all that sort of stuff. But I think you can almost rule a line through the next 12 months of earnings and just say, whatever companies report, investors are going to try and probably look past that anyway and try and find a new normal sort of number and discount what's actually going on.
Yeah, I spoke to a US fund manager this week, a guy called Chris Wallace, who's a chief investment officer of a company called Vaughan Nelson. They manage about $29 billion or something like that. Okay. He made a great point. He's like us. He's fascinated by all this macro stuff. He's very colourful. He's trying to figure out. He calls Donald the orange guy, what the orange guy is going to do next. But what he's doing with his investments is trying to find stocks and bets that don't rely on Trump's next decision, that don't rely on the macro strategy. I think that's the challenge for a lot of big investors at the moment. It's going to be hard to do, but there are businesses out there whose products or their market position is such that what happens, what Trump does next might not matter all that much. And I think that's what you'll see a lot of investors try and do. So, but that is really not very easy at the moment. All right, Anthony, crystal ball time. Let's look forward in 6 months. What is the headline that we'll read around Trump?
Good question. I mean, the US economy is slowing already, right?
Yep.
I mean, in the month of March, maybe it's going backwards. So you probably get June quarter going backwards. You need 2 consecutive quarters of negative growth. I love that oxymoron, by the way, James. Negative growth.
Yeah.
Can't believe I just said it. It's the dumbest term ever. Anyway, so in 6 months, we're going to be coming off a weak June quarter. It's going to be the end of the September quarter. It's going to be all about, are we in a recession? Are we not in the US? And what's the impact of that on Trump's trade deals, on the politics over there? There's the midterm elections next November. He needs the economy to kick back well and truly ahead of that. Yeah. So I think it's all going to be focused on that September quarter number, is it in a recession or not. As to whether it's actually going to go into a recession, James, I'd be completely guessing. Yeah. We've had commentary out of some of the big US banks this week, and they've got a better read on the US economy, obviously, than me and then just about anyone else. And the CEOs are saying opposite things. Some are saying, yeah, we're headed to a recession. Others are saying, no, it's actually still underlying pretty strong. Yeah. So as to whether we actually get the recession or not, I'm not sure, James, but I reckon we'll definitely be talking about it in the headlines. What about yourself?
My headline is Markets Stumped as Trump Dumps Deal. Ooh. Now, I don't know if you've read The Art of the Deal or looked at the way Trump likes to do negotiations, but before he reaches a deal, his sort of penultimate move is to walk away and say, no, I'm not doing this.
It's off.
Yep, it's off. And that sort of, and then after that, he comes back and pronounces this to be the best deal ever. So I reckon in 6 months' time, we'll be trying to get some trade deal or another that everyone thinks, yep, we're almost there, and then he decides, no, it's off.
Lord help us.
The markets will be smacked around, and then hopefully we get the good news after that. But watch out. These deals, he'll be up and down like a yo-yo on these things. It's going to be very exciting to watch.
I can't wait. All right, James, it's footy season. For our second topic, let's approach this year like a football match and do a bit of a quarter-time review. And the big factor, obviously, has been Trump. We've just spoken about it. It's been as strong as to blow away a lot of people's business, finance, and markets predictions for 2025. Now, James, I'd like us to wipe the slate clean here on 2025's predictions and take what we've seen from the first 3.5 months and try to come up with 5 trends that we've spotted that we think may be around for a while to come. So we're after 5 trends and we'll take it in turns to get them out here. James, you're the senior chook. You're up first. What's a trend that you've picked up on for our listeners?
I'm calling this one, Anthony, the case of the disappearing guidance.
Okay.
So every quarter in the US, every 6 months in Australia, companies have to come out and give a bit of guidance as to how their earnings are going to go over the next period. It's very important during earnings season. It's probably more important than the actual earnings they deliver.
Yep.
But guess what? Things are so uncertain, guidance is going to start being withdrawn. It's already happening. We've seen Delta Airlines, Diageo, the big drinks company, Logitech, the tech company, even Walmart in the US. They've all withdrawn guidance citing global uncertainty, and you can expect this trend is going to accelerate over the next few weeks during the US earnings season. And then when we get to the August earnings season in Australia, it will be in plague proportions. Everyone will be withdrawing guidance. No one's going to know what's going on. Everyone's going to have an excuse to deliver whatever earnings they like in the next 12 months. That's going to be a absolute rock solid trend, I reckon.
All right, so we'll have the blind leading the blind. The other thing we saw in the US is, did you see that one? I think it was United Airlines said, all right, our earnings could go this way or they could go that way, depending on what happens.
I think it's much safer just to withdraw. All right, Anthony, what about you? Give us a couple.
I'm going for gold, James. And by this, I'm talking about the actual commodity of gold. I've never seen so much hype around gold. I mean, I get it. It's the volatility, the uncertainty, threat of inflation in the US, worries about the US treasuries as a safe haven. All that stuff's driving the buying of gold and the gold price. It's up to US $330 an ounce, James. Now, it was at US $2,400 an ounce a year ago. That was an all-time high, so it's up about 50% since then.
Yep.
It's double where it was 5 years ago, and it's triple where it was 10 years ago. James, all for a commodity that no one's really sure what it does or what it's for, other than just to sit in vaults and underpin the whole financial system.
Yeah.
Now, James, brokers are chasing this so hard. I don't think I've ever seen more one-sided commentary and upgrades. Everyone's telling us the gold price is going higher. Every week we're seeing commentary out of the big banks saying that. None of these tipsters were telling us that a year ago or 2 years ago, yet we're to believe them now. So the way this then translates further into markets, James, is the actual gold miners, the ones that are digging up this stuff and selling into the crazy hot market. Even the Australian miners, it's even better for them because the currency's falling, but they're making out like bandits. So if you look at the top 10 stocks on the ASX this year, the first 9 are all gold miners.
Wow.
Regis Resources, Genesis Minerals, Evolution Mining, Newmont, you name it. I won't go through them all, but they're all gold miners. So look, people are obviously flocking to this trade. Gold's, according to everyone, going up for the next little while. But James, things don't keep going up, do they? So at some stage, this has to come crashing back down.
The momentum of the crowd, it worries me a little bit. Like, usually when everyone's running in one direction, it's not a great sign for markets. But Anthony, I'm a bit worried. If we get to Brisbane Olympics, we might have to make the medals out of wattle or chocolate or something. Because we're not going to be able to afford to put gold medals together, are we?
Mate, I'll chip in for the gold medals. I think there's not much more important than a gold medal at the Olympics.
True. All right, you're on a roll. Give us another one.
I'm looking at corporate governance and I'm looking at Australia. And James, how hard is it to line up a new CEO at the moment? And what's going on with all these executive chairmen? Like we're seeing a bunch of CEO searches really drag on. Had it in Endeavour Group, which owns Dan Murphy's. We had it at our own employer, Nine Entertainment. We've had it at WiseTech, Domain, Amcor, Mineral Resources probably goes in this camp. So you've got these CEO searches taking ages. Meanwhile, companies are going to executive chairs as well to give their chair even more power. We've got that at Myer, we've got that at WiseTech, got that at Bapcor.
Yep.
These two things, James, this slow march on the CEO search and then the rise or re-rise of the executive chair, sometimes they're linked, sometimes they're not. But either way, it's a big step backwards for corporate governance in Australia. And does it matter? These things never matter until they do. And the problem is you often get them in situations where performance has been bad. And we saw that at Nine and Domain, Endeavour. Earnings are down, share prices are weak. That leaves the company vulnerable to takeover. Suitors turn up. The fact they don't have a proper management team or board just makes them even more vulnerable. And before you know it, you can lose what are pretty good assets at inopportunistic times.
Yep.
So I reckon, James, we're going to see more of this. I'm watching with interest because for a few years, directors have been telling us it's really hard to attract talent to ASX-listed companies because of all the compliance, disclosure, all that stuff. I've always thought it was bull dust. But I just wonder whether these CEO searches really are starting to get quite hard and whether we might be at a bit of a turning point.
It's one to watch. Just to check, are you available for any suitors out there?
Mate, I'm not leaving the Chanticleer podcast. Tell you that one. What about yourself? What's your next trend?
Well, I'm sitting here in Melbourne.
Mm-hmm.
My next trend is Victoria. It's in the naughty quarter, Anthony.
Yeah.
In reporting season in February, we saw a heap of companies. Seven Group, Wesfarmers, JB Hi-Fi, ARB, Super Retail, Stockland, Bendigo Bank. They all mentioned that the Victorian economy is travelling worse than the rest of the country.
Mm-hmm.
I mean, this week we even had a fund manager, L1 Capital. They made a mozzo shorting the shares of NAB, which is basically a bet that the share price would fall. Now, why did they short NAB? Partly because they're based in Melbourne and they're more exposed to the Victorian economy than their peers. So
wow.
The spiritual home of the Chanticleer column is, of course, Melbourne, Anthony.
Yeah.
And I'm worried. I'm worried about the state of Victoria. This is a real issue. It'd be fascinating to see in the election how the Labor vote in Victoria holds up. Watch out for, I think the Liberals think they can win a few more seats back here, and I think they probably will. And it's tough here. It's a bit like the housing market. Turning around an economy is usually the work of decades rather than months or years. So watch out for this one. Anthony, bring us home.
This last one, James. Now, it feels like a lifetime ago, but remember, it was only 6 or 8 weeks ago we had reporting season in Australia. Now, I'm only going back there because I think there was something that happened then that we need to prepare for, and that's the stocks trading wildly around results. Remember, there were plenty of moves up or down 10% or more on numbers that were maybe a little bit too hot, maybe a little bit too cold, but most of the time they weren't actually that bad. Now, I think this is the rise of computer trading, James. This is the rise of the quants, the momentum factors, the sort of fast money elements of the ASX. The casino elements have really ramped up. The older, slower, fundamental investors who used to be the ones that set the prices, they take a bit more time to make decisions. They normally wait to meet management, to find out a bit more about an earnings miss or an earnings beat, to think about whether that really changes the 3 or 5 or 10-year value of a company. Whereas the computers, James, they just trade like crazy from the get-go. Now, they're definitely a bigger part of the market. That's definitely creating more volatility, and I reckon it's going to be around for a while to come.
Is it one of those things where you should sort of, obviously you want to read the AFR every day and every minute of every day, but is it one of those things where you should just turn off the stock market for a while if you're a long-term investor, which most of us purport to be?
Yeah, for sure, but it depends on your style, doesn't it? I mean,
yeah.
These computers, they're not pretending to be long-term investors. There's market makers, liquidity providers, they're just constantly peppering the market with bids and offers on things, and that's their role. But surely they should create opportunity for the longer-term investors, right? I mean,
when things are mispriced, yeah.
Absolutely. Your stocks are going to jump up, jump down, maybe when you weren't expecting them to, but that creates opportunities.
But Anthony, wild moves around individual stocks, wild moves in macro from Donald Trump. It's going to be a fun rest of the year, isn't it?
Good times for the Chanticleer podcast, James.
Absolutely. All right, we'll be back after the break. It's one of the shortest weeks of the year next week, but there's still plenty happening. Back in a sec. Welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. Now, Anthony, it's a funny little period we're going into here because Easter, the market is shut on Friday, and it's shut on Monday as well. We're back on Tuesday, and then we have a couple of days, and the market shuts again for Anzac Day on Friday. So do you think this could leave volumes on the market pretty low and sort of exacerbate any drama?
I reckon we'll be at early January volumes, James, $4 billion a year or less through the ASX. So yes, volumes will be very light. Does it exacerbate drama? No, I reckon it just won't be a dramatic period.
Okay, great.
What do you think?
Well, look, I hope you're wrong because it's always more fun for us to write about drama. I think normally you would be right, except for Donald Trump. I think anything could happen in the next few days. I've been in the US for Easter. They don't tend to pay much attention, I've got to say. Not too many hot cross buns on the streets of New York and LA, so I reckon there'll still be plenty coming out of there. One thing to mention, we do have a lot of speakers, officials from the Federal Reserve out speaking. Now, on Wednesday night, we had Jerome Powell, who's the chair of the Federal Reserve, giving a speech to the Chicago Economics Club. I'm not sure if you remember, Anthony.
Yeah.
But he did open his speech with a joke about Ferris Bueller, which I thought was quite funny.
Nice.
Ferris Bueller's famous line, "Life comes at you fast," which is pretty apt at the moment. What everyone was looking for was Jerome Powell to give the market some comfort, to say, hey, we've got your back. If things get really nasty, we could cut interest rates and give you some support. But instead, what he said was, we're sort of stuck. You know, we've got a dual mandate, which is employment and stable prices. Inflation's still sticky. Yeah, the market's going up and down, but it's not really broken. And so for now, there's no support coming from the Federal Reserve. Now, let's see if the Fed speakers over the weekend and into next week repeat that message, or whether there's a little bit more comfort provided to investors who are seriously getting worried about exactly what the Fed's going to do. It's going to be interesting to watch.
Yeah, it's just hard for these guys to have a strong view at the moment because everything is jumping around.
Yeah, and that's exactly right. They're like us. They don't know what's coming next just because they got better spreadsheets and better models. You know, what you plug into those models is so difficult to figure out at the moment. All right, Anthony, we do love a question on the Chanticleer podcast. This week, our question's from Ash from Victoria. If you've got a question you want to send in, you can email us at chanticleer@afr.com. You can also send your question in audio form. Just record a voice memo on your phone, include your name and where you're from, and email it to us. So Ash asks, "G'day Chooks, love the podcast and enjoyed the chat about tax reform last week. I'm a huge supporter of the broadening of land tax combined with the scrapping of stamp duty being a key tax reform, particularly to fix incentives in the property market. I'd love to hear a broader discussion on this and understand why governments seem so reluctant to pursue something which appears, at least to me, to be a slam dunk. Thanks, Ash from Victoria." Now, Anthony, there's a bit of history here. Ash isn't the only person who thought this was a good idea. Dominic Perrottet, the former Premier of New South Wales, he was a big advocate for getting rid of stamp duty, which he called a horrible tax, and broadening the land tax base. So the theory goes that land tax is a sort of more equitable tax on property. And I guess the other thing it does, that the other issue with stamp duty is that it's so high, the problem is it can keep people in their homes. And so what you get is that, for example, older Australians don't feel they can move because of the stamp duty burden that they face. And as a result of that, you don't get the sort of recycling of homes into the market that you otherwise should get. Now, the problem for Dominic and for Ash is that voters hated it because it would be quite a painful transition from one to the other. And Perrottet basically was forced out of office, maybe not just for this, but it was certainly a contributing part of his departure. Does Ash's idea still have a hope, do you think, or is the land tax debate sort of dead for now?
Like, I think where it's coming from is a good place, right? Because it is trying to about encourage that recycling of housing like we've been talking about. Yeah, I mean, as Perrottet found out, the problem is stamp duty is something that people don't come in touch with every day. So it's a hassle when you actually go to buy a house. But assuming you're not doing that every day, and not many of us are, you don't actually come across it too much. So it's an absolute devil of a tax when you meet it, but it's not in your daily life. So you tend to forget about it. So you whinge about it once every 8 years or once every 10 years, and then you don't see it. The land tax, how that shapes up, I mean, that's something that you might have to come around to a lot more frequently, right? So it will actually be front of mind.
Yeah, exactly.
It's also a state-based issue. We were talking about Commonwealth stuff last week. So you'd have to go through on a state basis too, which is obviously a lot more reform.
Well, Perrottet, from memory, was actually asking the federal government to step in and smooth out this transition with the provision of some funds. I think he even called it a productivity fund or something like that. And I think that nails the problem here, Anthony, that you would have to get not only bipartisan support for something like this at a federal level, but it would be best if all the states moved at the same time. Everyone got rid of stamp duty at the same time and increased land tax. So you'd have holistic reform. You wouldn't get sort of jurisdiction shopping. I know that's not easy with housing, but there is a bit of it that goes on with it with housing investment. So, Ash, you're totally on the right track, but it's one of those big long-term solutions that's really hard. And in the heat of an election campaign, you get the band-aids that we've seen on housing that we discussed at the top of the podcast. It's such a tricky thing, isn't it? We're not good at long-term painful stuff.
True, James.
All right, Anthony, thanks for another great week. You're having a well-earned break next week. So enjoy your Easter with your family, and hopefully the weather's kind and you can forget about those crazy markets for a moment.
Thank you, James. Happy Easter to yourself and to all of our listeners.
Absolutely. We'll see you next week. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to The Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson and Anthony McDonald, and it was produced by Alex Gow and Lap Fan. Our theme is by Alex Gow, head of podcast is Lap Fan, and the head of premium content is Fiona Buffini.
The Australian Financial Review.